It's Thursday, that means it's Legacy Review Day at Brave New Coin. Let's take a look at all the usual suspects. Are there cracks in the bull trend armor on Legacy? I suspect they are, especially with tech. How does that bode for crypto? Let's take a look at the correlations for Dixie, Gold, SPX, NDX versus BTC. This is 30-week rolling correlation in the oscillating charts down here. And historically, Dixie has been, for the most part, negative on an extremely high time frame correlation. It's held a negative correlation. It's currently returning to basically no correlation. Gold, though, remains highly negatively correlated. Kind of bizarre. SPX and NASDAQ still on a 30-week rolling basis, massively correlating with BTC here. Dixie has been rising, which isn't something you want to see if you're bullish. VIX, VIX is rising, not something you want to see if you're bullish. Dixie is also rising, but VIX is rising, which means there's an increase in a volatility expectation for the market, specifically legacy markets, and this indicates fear as well in the market, typically a risk-off type of environment. How all of these correlations line up is that crypto mainly has been risk on. So if the VIX rises, historically that has been bearish for crypto. Since March, we've continued our decline in the VIX as we're getting vaccinated and back to normal here in the United States to some degree. So if you're bullish, you definitely want to see this continue to decline. And another way to read this would be that there's a long downtrend for VIX to go yet, and that should bode well for BTC. So maybe that's a little too optimistic. Here's the daily correlations. I think what's the most interesting about this for BTC is that the Dixie 30-day rolling, you can see how negative it was and how it's starting to get positive again. Kind of bizarre that we are correlating with Dixie at this point in time, but I suspect if we actually do get another leg up in BTC, we will be holding that negative correlation once again. And you can even see how SPX and NASDAQ, that negative correlation is beginning as well, and or the strong positive correlation is waning as both of those continue to increase, where BTC is just remaining flat and choppy. So not a leading indicator, but just interesting to see, is BTC following risk on environments, that sort of thing. It doesn't look like it is. It's correlating with a risk off instrument historically, the Dixie. Although it's uncorrelating with gold, it's kind of all over the place. If we look at ETH, again, comparing the VIX with all the other correlations, the correlation with the VIX and ETH holds just the same. Any rises in the VIX have been bearish. Generally, we're mega negatively correlated with Dixie, highly positively correlated with gold. Not currently the case for either of those on the 30-week rolling basis. And you can see we're basically in lockstep with SPX and NDX on a 30-week rolling basis. So overall for ETH, it's just as vulnerable to the SPX and NASDAQ bear trends or pullbacks in the near term. So if you're bullish ETH, it's also worth paying attention to legacy markets for that reason. Here's the weekly Dixie chart, and the first thing that I see on this is just this massive TKC clamp on the cloud here, along with a potential inverted head and shoulders, diagonal, shoulder, head, shoulder, whatever. It's messy. There's also a type of inverted head and shoulders here that eventually melted up. But you'll often see with any TKC clamp or any potential reversal on the cloud, you will see a chart pattern to follow along with that typically. So I like 96 in Q3 basically. And what I was saying on Twitter today, I like 96 in Q3 or leading into Q3 or throughout Q3, which should lead to a downtrend or pullback in crypto. And then Q4 is typically more bullish for crypto, and that's when you'd likely see Dixie pull back as well. There's a lot of prognostication in that call, but how it stands here in a vacuum, I would read this as massively oversold, ready for a reversal, just like it did in 2017, 2018. One way to cancel that reversal would be to just stagnate at these lows, let this Kijun line come down to price. This is going to take a long time. It took basically 6 months for that to happen in 2018. So either way, it's either going to be Q3 or Q1 2022, I think is going to be pullback city for crypto based on what that looks like. DXY though on the daily has been unable to maintain anything above the 200-day moving average. Again, you can see that macro inverted head and shoulders forming, and it's had inverted head and shoulders inside of itself. I'm going to look at coin in a second. Coinbase, that's had a series of inverted head and shoulders as well. Now, none of these are perfect. Are they tradable? Maybe, but collectively they tell you we're clearly getting less and less bearish and attempting at some sort of bullish reversal. Here's gold, which has picked up nicely since this W, breaking out of the falling toucan. And on the daily, it's setting up for a daily Kumo breakout. So it looks rather bullish for gold in the near term, even though this weekly looks like it wants a bearish TK cross and an edge-to-edge completion down to like 1650, 1620, something like that. So this next few weeks leading into Q3 are critical for gold specifically because it's got a lot of confluence for entry triggers, both long and short. You know, in the near term, it'll probably tell you to go long on the cloud, but I suspect into Q3 we'll know rather quickly whether or not this edge-to-edge will play out. Now, how this works is you want a bearish TK cross to support the short on that edge-to-edge, and it's not there yet. So I would definitely watch the daily if you're trading that. Silver on the daily looks amazing to me. This may take all of Q2 to finally fill in this ascending triangle, but it looks like it definitely wants a bullish continuation markup phase. In a vacuum, you would trade this as a bullish continuation every time, regardless of how it ends up. The bias here is strongly bullish. Now, SPX on the weekly, again, every week I say this looks bad for reversal. This looks overbought. This looks way too hot. And this week is no different. Again, you're getting this massive TKC clamp, just like the Dixie, but on the bull side now, suggesting mega overbought conditions here. You're getting these danger warning sign candlesticks, whether this is a TriStar, Gravestone Doji, take your pick. It just, I'd feel very apprehensive going long up here on a chart that looks like this. Downside potential is vast. You know, this would take likely multiple weeks to play out, but just like crypto, stairs up, elevator down. I mean, March was no different. October 2018 was no different. January 2018 was no different. Stairs up, elevator down, stairs up, elevator down, stairs up, elevator down, stairs up, mini elevator down. So this looks ugly to me for sure. And I would not want to be long on that. And NDX looks like it's setting up more and more by the week for a very similar natural pullback. I mean, this is part of any bull trend. So it doesn't mean everything's all over. It just means it's definitely overbought. It's been overbought for a long time. Hasn't really made higher highs in a big way enough for the averages to move up. And this is the cloud just telling you this whole time, be careful, be careful, be careful. This C-clamp gets wider and wider, and eventually you get a resolution on that mean reversion down to somewhere around 10,500, something like that. You've also got M double top stuff here, so maybe I'm just like reading into this pareidolia, confirmation bias, whatever, but it does not look bullish to me. Does not look ready for bullish continuation. Definitely looks like it's got mean reversion potential in the making. GME is setting up for something. I don't know what this is. I don't know if it's a multi-shouldered head and shoulders. I don't know if it's just a triangle. High time frame Bollinger Bands are pretty tight as well. Kind of amazing that it's stayed at this level for this long, considering it opened 2021 at 15. So it's holding a 10x still. Hasn't really pulled back significantly down to its open. It's 2021 open. So I wouldn't want to be holding this, but if it's anything like Doge, you know, that just went again, right? Doge just keeps surging. So it's just hard for me to look at this. Anything that's knocking on the door of a diagonal or a horizontal or whatever, the expectation is definitely moving lower. Just on balance, that's typically how it works. AMC, kind of the same thing. You've got this horizontal diagonal. You know, maybe this is just a giant triangle, right? But I wouldn't want to be long on AMC. Here's Coinbase on the 10-minute chart. really weird time frame, but just trying to show that it's had a series of attempts. You know, you can see these aren't perfect inverted head and shoulders, but it just keeps trying to bottom, trying to find a bottom, and just can't. Every time, just mega sell-offs over and over and over and over again. Even getting a volume ramp on this most recent sell-off. So you got to think that capitulation in the near term is soonish when you see volume ramping up like this. So either we get a new low on lower volume, which would be a bullish divergence on super low timeframes, or you just get like a third drive, 1, 2, 3, third drive down on extremely high volume, capitulation type volume. But this definitely does not look bullish in any way, shape, or form, especially when it's failing its reversal attempts over and over and over. It just does not look good. Here's Tesla. Speaking of a canary in the coal mine, this is the 365 MA. This is the multiplier on the 365 MA. You can see the bottoms, you can see the tops historically. Now it has surged at this multiplier for quite some time after Adam and Eving in 2019, massively selling off in March. And now it's just getting a series of highs on less volume in 2020 and 2021. So again, I would be apprehensive up here holding this. It's already told you to sell 10,000 times over at these levels. So in a vacuum for me, this would be a be careful situation for sure. Here's Square 4-hour March Corona lows. You had this 4-hour 5200 cross recross, and it's looking just weaker and weaker. It's failing to push highs. The inverted head and shoulders / Adam and Eve broke up and now is just getting weak again. So this looks like momentum is more and more on the bearish side for Square. And the reason I'm looking at these companies is because they have BTC in their treasury. GBTC, just like BTC USD, has kind of been rather mediocre at highs here, just sideways. Volume continues to contract since January. Not something you want to see if you expect bullish continuation. The premium is still negative 12% versus ETH's premium, which is basically 0 or slightly positive at 1%. And this week, Grayscale announced they'd be buying more GBTC, 750 million in total now. And that hasn't really done much to right the ship just yet. So they may need to keep announcing that they're buying more. And eventually, if this flips to an ETF, you'd expect at least parity with spot at that point. ETH, though, just continues to look great, like ETH, USD, surging at highs, had its W, ascending triangle, whatever you want to call it here, and it just looks like Moon City. CME futures for BTC, slight premium as well. Nothing too crazy here, just setting up for a potential mean reversion as well. Getting a slight contraction in volume, not as extreme as GBTC. Doesn't look in dire straits for complete mean reversion, but it is setting up for a potential reversal there. CME ETH futures also just mooning, so there's definitely a institutional appetite for bullishness on ETH, at least in the near term. It attempted this diamond top, and it just broke up anyway, so now it's working on some sort of rising wedge, but still looks rather bullish. And the reason to look at any of this stuff is just to see, is there a premium, is there a discount, how different does CME charting look versus spot price. And I'll also mention the ETH-BTC portfolio on Enzyme.finance, currently undergoing maintenance, but it's completely transparent. Typically you can see AUM, trades, allocations, deposits, withdrawals, no mins, no max. You can get in and out anytime. And how this works is you deposit ETH or USDC to a smart contract, and then I have the ability to trade within the parameters of the fund. We also have a DeFi portfolio where we keep 15 to 20 DeFi projects in this portfolio, where you can also see the trades, where I trade everything, when I trade everything, all done through DEXs. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.